Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. And happy Friday. It's Friday, June 14th. Hope you guys having a great day and hope you guys got better plans coming this weekend. We do got quite a few economic news to go over today, so we'll jump right into the retail sales for the month of May. We'll start off with last month was revised higher to 0.3%. Forecast for May was 0.7%. Came in pretty close, but it came in at 0.5%. But if you look at the previous month, it was actually lower. It was actually in the negative territory, and they have a revision for much higher. Same thing for the retail, excluding the autos, the big ticket items. This was revised higher to 0.5%. Forecasts call for a 0.3% rise, and it exceeded that to 0.5% in May as well. So a pretty good month for retail sales numbers here. Industrial production improved slightly as well. We had in April it was like minus 0.5, and then we had a slight improvement to 0.4%. 0.2% is the forecast for May, and it came in at 0.4. Excuse me, at 0.4%. We also got capacity utilization. It improved a bit, so we had 77.9% in April, calling for 78%, and it's slightly higher at 78.1% in May. Now let's go to the next page here. We got a little bit more here. We got consumer sentiment. Now this is the one negative here. Obviously, we saw in May a really good number here at 100. Forecast was calling for a slight dip to 99, and it dipped a little bit further down to 97.9. So people weren't feeling as good in May as they were in as good as they were in May. So we'll have to kind of watch to see if this continues, if this becomes the final number or not. We'll get it on their number towards the end of the month, which will be the final number. We usually get about 2 of these in consumer sentiment. Business inventories had a nice improvement as well. So overall, economic calendar, as you can see, has been improvement except for consumer sentiment. So in March, it was basically nil, no change in business inventories, but in April, I had a nice 0.5% increase in business inventories. So let's jump over to headline news. Stock market is down. It's taken most of its cue, even though we had some pretty good retail economic data there. It's taken most of its cue here. China came out with some reports that showed more of a slowdown in its economic growth, and then Iran is not taking responsibility for the attacks on the tankers yesterday. So of course those type of attacks, if they could continue rising oil, of course, rising inflation. So that's not good for any of the markets. So this could lead to more tensions and maybe even military strength in that area between U.S. and Iran. So as oil prices have been climbing a little bit as a result of this, and they're kind of watching to see if this continues or not. Broadcom is also on the news that they lowered their expectations. They're blaming the U.S. and China trade that is concerning their customers as well as in clients and as well as partners in the technology sector here. So that's kind of affecting them. So that's kind of bringing the market down a bit as well, which is kind of a sign of a slowing economy. So let's kind of take a look here at the bond market. Bond market's down a little bit. We're down about 6 basis points. So not enough to change rates. So we're kind of unchanged levels here. We're still kind of seeing this level here between the 2 Fibonacci's. 10-year treasuries. 10-year treasuries actually down. We're down to about 2.08 right now, and we're just touching this, trying to fight it below this. There's a pretty strong resistance, a floor of support here for the Fibonacci and the yields here, but it looks like it's kind of testing it again. So we'll have to kind of see if it can hold. As you can see, it's got pretty much a double layer here, but again, we'll have to watch and see if it can make its way below that or not. But it's an important level there for yields to maintain its current pace right here. So that's pretty much a wrap for the day, and again, rates are unchanged. So heading into the weekend, I hope you guys enjoy yourselves. We'll look forward to see you guys next week. Next week we do got the Fed meeting going on, and we got a lot of housing data that will be on the docket as well. You guys, again, enjoy your weekend. We'll look forward to see you guys on Monday. Thanks for watching. Bye-bye.